The next core concept being impulse versus confirmation trading. And obviously there's a very clear difference between an impulse and a confirmation. It is extremely important to recognize this, because it also allows you to have a better understanding on when to take trades or when not to, of course. So I would propose to start with the impulse, and it's a very simple to identify. It's no rocket science, and it's not overcomplicated, but an impulse is very simple. It's a sudden, strong or rapid movement in price, okay? Whether you go up or down. Obviously, all the concepts, everything that I address or explain, it goes either up or down. It goes both ways, okay? It doesn't really matter. And you can pretty much see this as a form of an explosion of force, so to say. Again, it can be positive and it can be negative. An explosion of force within the market. So for example, everything that I address right now, and you can clearly see a surge of price going up, or for example, and again, this is also a very good example, you know, very rapid price action. It can also go down. There you go. This is a very beautiful example. This is a very beautiful example of impulses, and these are all impulses, okay? It's very clearly visible. And obviously, if you compare these candlesticks, these blocks, there's a clear difference between the previous or the previous candlesticks. The impulses, 9 out of the 10 times, they usually cut through specific levels. They break through resistance levels, or they gain, or they break through resistance levels, or also below support levels, of course. And you also need to understand that impulses can occur on every single time frame, and obviously also market, okay? On the seconds, the minutes, the hourly, or the hours, the days, the weeks, the months, whatever, okay? So this is just a very universal something. This impulse, it's always welcome. It's always good to see, of course, but it is very important, or very difficult, very dangerous, and very tricky to trade. Because many people, what do? Whenever they see a surge of price, or they see a crazy dump taking place, they just randomly take a trade, randomly click on buttons, so to say. They pretty much take trades based on emotion, fear of missing out, FOMO, okay? That's one of the most dangerous things to do, especially when it comes to trading, because you need to be logical. You need to remain rational, and you pretty much need to have a robotic approach. Okay, because for example, whenever we see this taking place and we are opening trades here or something, even though we can clearly see the outcome, of course, of these impulses, so to say, it is one of the perfect formulas to lose your money, to lose your underwear, because there are no guarantees. Maybe what can happen, price can go up, but then immediately go down as well. You're taking a long position all the way up because you're chasing the price, which is the worst to do. Trust me, I have plenty of experience with this. And then you immediately get stopped out, you take an L, you lose money, because then of course you have been part of the so-called liquidity. So you just need to be very careful. Never blindly jump into an impulse, okay? Because again, an impulse can continue, or it can immediately reverse and fall down and just take you out. Then when it comes to a confirmation, this is something that you want to start applying as per today. A confirmation is pretty much you're waiting for some form of proof to be seen, to be reflected within the markets. And again, I told you, when it comes to reversals or breaking through, losing particular levels, we are counting specific candlesticks. So in order to define or identify a confirmation of a gain, we need a couple of candlesticks to get above specific levels or below. A confirmation of a gain or a confirmation of a loss. It works both ways, of course. So you're pretty much waiting for proof, okay? Quote unquote proof, before taking a trade. You want to see clear evidence that obviously the market is showing some form of strength, some form of weakness before you are taking a trade. You always need to make well-educated decisions. okay? Educated guesses. You must know by now that you shouldn't gamble. Don't gamble on the charts, guys. If you really want to gamble, just go to the fucking casino or whatever, but don't gamble, okay? If you want to trade and you want to be consistently profitable and you want to make something out of this, an extra source of income, be disciplined, wait for specific triggers or confirmations, and that's how you can make money on the longer term. By waiting for confirmations, you avoid trapping yourself in wrong positions, false signals, and you make less mistakes, fewer mistakes. Okay, this is very important. So this is a clear difference between an impulse versus a confirmation. But then again, how do we take a so-called confirmation setup? So let's just kickstart it with Bitcoin. And this is actually a beautiful example where also a failure to lose comes into play. But this is just something nice. So we are going a bit faster than usual. This level is what we consider to be a move to the low. Normally, you want price first to get above, then come back for the pullback, and that's where you should actually take the trade. However, this, as you can see, we didn't gain prior to getting above the level. So we were initially in a downtrend. Normally we were expecting lower prices to be seen, but as you can see, the market decided something else, and suddenly we received this crazy impulse where price just surges, breaks through levels, and that's pretty much what leads to a change in the price trend. Okay, so this is the impulse, of course, very aggressive, sudden price increase, a surge of price, and then we go from a downtrend to an uptrend. But then normally, instead of just opening a random as fuck trade here or here or here, because obviously you can aggressively go up, but you can also aggressively go down and be part of the liquidity, so to say, I would actually advise people to wait and see this box or see this level, this zone, as the place where you would want to look for potential trading setups. And even though, of course, this is a very higher time frame setup, and it actually took months and months and months in order to reach this box, this usually is the better trading setup. This part is what we consider to be a confirmation setup versus the impulse. Okay, so this is just one of many examples that I will provide, or one of the few examples that I will provide. But when it comes to a confirmation setup, let me have a look. Maybe we can go to ETH. Let's go to the 1 hour. So there we go. Okay, this is actually a very beautiful example as well. So this particular level is what we consider to be a move to the low. Okay, again, why is this considered to be a move to the low? Because we can clearly see we created a local peak, a local top, a swing high, where price eventually falls down below, and it creates a so-called lower low, because this was the previous low. This is the so-called lower low. But then again, you can also see the price suddenly surges. This is the impulse. Okay, we never want to trade impulse moves. Okay, it requires a different form of trading. Also, it's much more difficult, and it's a perfect formula to lose your underwear. But what do we know? We see a confirmation of a gain because we close above this particular level, resistance level, with multiple candle closures. Again, it doesn't matter whether it's the green color or the red color, we have a confirmation of a gain. So we are very interested. You do need to understand as well that even though we are creating a very beautiful reversal, there is a possibility where price just continues to go up after touching this level. That's always the possibility. We never know on beforehand whether price gives this perfect retracement all the way back to the previous low and then gives the move. But it can also do something like this, where you just have a small pullback towards, this, because it was initially functioning as a form of resistance, and then again resistance becomes support. So this is an area where we can potentially look for trades. However, what do we need to do? So eventually, as you can see, price touches this particular level, but instead of just simply smashing on a random piece of price action, we actually want to zoom in on the somewhat lower time frames, and hopefully by zooming in, hopefully you can already see what's actually being created within the circle. So just take into account on the bigger time frames, we did something beautiful. We got above in very important levels, okay, which is amazing to see. That is pretty much the indication, the signal of strength where price wants to go up. Okay, so that's something that we need to take into account. As a trader, we always need to collect multiple puzzle pieces in order to create well-informed decisions. Eventually, price comes to our level. This is what we can consider to be a so-called point of interest. We want to trade here. So before just simply randomly clicking on buttons on the lower time frames, because we were initially looking at the 1 hour, now we are going to the 15 minutes, we need to see, of course, a potential reversal. Because again, and it's all perspective, you need to understand as well, on the smaller time frames, you can hopefully identify as well in what type of trend it is on the 50 minutes. And what do we need to do in order to break a downtrend? You need to gain levels. So let me just remove this level on the left, but take it into account, keep it in mind. As you can see here, this is what is called a move to the low. We gain this level, and then as you can see, this is the previous low. We are waiting for the retracement, and the retracement in itself, which again, you know, we are defining the box by taking the bottom of the wick to the bottom of the candlestick. This is the probability and the so-called confirmation setup after touching the level from the left. And as you can see here, eventually it results in a beautiful, beautiful, beautiful reaction that goes all the way up. So long story short, and this is something that I pretty much trade as well. I don't want to invent words or something, but this is what is called a so-called top-down approach. So this is pretty much what I do myself. I usually perform a technical analysis on, let's say, the 1 hour or the 4 hour. Okay, so I perform a technical analysis on the higher time frame, but I take trading positions on the lower time frames, So you go from the higher time frame to the lower time frame. The higher time frame for the bias, higher time frame for the bias, whether we are in an uptrend, or to identify, of course, whether we are bullish, bearish, uptrend, downtrend. And the lower time frames is to take trades, confirmation trades for higher probability. So that's pretty much how I trade myself. And I will be giving you a very important table, which is also something that you should definitely note or write down. There's a clear difference between an analysis versus taking a trade, execution. Okay? When we are performing a technical analysis on the 4-hour time frame, you want to take a trade. 4-hour analysis, you want to take a trade on the 50 minute. 1 hour analysis means you want to take a trade either on the 3 minutes or the 15 minutes. When you're performing an analysis on the 50 minute, you want to trade on the 1 minute or the 3 minute. This is pretty much the holy grail when it comes to the time frames and the execution for taking trades. These two explanations, and especially the latter one, the last one, is very important. Take this into account. Okay? When it comes to confirmation trading setups, there are actually a couple of beautiful examples prior to the one that I've already showcased. So in this case, if we just have a look at this particular level. So this, what I pointed out right now, is a very simple move to the low on the 4-hour time frame. Again, if you have a look at the red candlesticks, you can clearly see that price is going from this point to this. So instead of just randomly shorting all the way down, because again, this is also a perfect example of not chasing the price, because if you would be shorting all the way down, you would eventually get liquidated, get stopped out before giving the actual move. So we know we need to remain patient, and then whenever price happens to go to this particular level, this is a 4-hour level. A 4-hour level means a 15-minute execution. So then hopefully, and maybe I should actually invert the chart to make it a little bit more better or visible. Again, we touched a very important level on the higher time frames. So as you can see, what is a confirmation setup? Instead of playing immediately, we need to wait for certain triggers, or you want to see a so-called reversal being created. And this is perfect. So let me just fine-tune this level for a quick second. This was the level that brought us new lows, made us new lows, pardon me. And look, this could have been the trading setup. Why is this valid? Because after touching the level on the left, a 4-hour level, a 4-hour move to the low, we are waiting for so-called triggers, okay? Because again, this was the move to the low. 1, 2, 3 candlesticks, okay? You wait for the retracement, a small pullback when towards the previous low, even though the previous low, this entire zone is a probability. And that eventually, as you can see, leads to one of the bigger shorts. Of course, it's in hindsight, so it's a little bit easy to say, but this is the actual short. That's the difference between trading impulse versus confirmation. Many people, when they see this crazy surge or crazy dumper, many people, again, they take trades here just by out of emotion, you know, not based on anything logical. But then again, when you understand that this is a very important level, because when we zoom out and we see that this is in line or similar to a 4-hour move to the low, then eventually, whenever price touches this particular level, we want to zoom in on the 15 minutes. And whenever we see the respective structure being created, that's the moment where we want to execute. And these are the proper setups to take. So this is something that you need to take into account, guys. Confirmation versus impulse.